everyone, John Howell here from livetradingroom.com.au, and in today's video you are going to learn the Hth P technique following on. Now this video is following on from the couple of videos we've done in the past. Okay, so if you haven't watched the last 2 or 3 videos, then this is going to seem a bit confusing for you. If you have, fantastic, then let's move on. Now, this is what I want to say, that the disclaimer here is this. What I'm about to provide to you is only general information, okay? It's only general information. I don't know your personal circumstances, so this is not geared for you only. I am licensed to give general advice, but I don't know your circumstances, so this is just general education only, okay? That's really, really important to understand. Now, the Hth P technique. This is really powerful, and I want to stand back and give you a bit of education first, and then we're going to move into the actual technique itself. Now, the HT and HP, what does that stand for? Well, this could be, HT is stand for higher trough, okay? Because what actually happens in an up market? Okay, we have market goes up, market comes down, it goes up, down, up, down. Now, what is that? What do we have here? Okay, now once again, we're starting with the basic education. You need to understand this so you can understand the HP technique within the overall high probability system, okay? So, what do we have here? We have a trough, here we have a higher trough, here we have a higher trough, and so on and so forth, right? So we have higher troughs equals uptrend, okay? You with me so far? So this is HT, or this could be HT, or even LT, okay, which stands for lower trough. Okay, so in a downward market, what do we have here? We have a lower trough, and a lower trough, right? But in our example, what we're using before in the past, we've used an uptrend, right? We've used an uptrend. So for an uptrend to continue, what would we want to see? We'd want to see the troughs higher, okay? So trough higher, trough higher, trough higher, and the troughs to continue higher mean the buyers are kicking in, bringing it back up, giving you a higher peak up here, giving you a higher peak up here, and so on and so forth, right? So you with me so far? Now again, this is just the basic education. You need to understand this, so when we move into the other deeper end, you're going to understand how this is all going to fit with me. So bear with me for just a minute, okay? You're going to see how this is all going to fit within the system. So what we have here is 2 things. One, we have a complete downtrend through here. So what do we have in a downtrend? We have lower peaks, LP for lower peaks, and LT for lower troughs, right? And it just steps down. That's in a downtrend. So what do we have? What do we have here? We have an uptrend, right? What do we have in an uptrend? We have higher troughs, which that's the HT, okay, in this example, and also HP, which stands for higher peaks. Okay, do you get that? If you don't get that, that's fine. Simply watch that section again. But it's just I'm just educating you right now and understanding. Okay, in an uptrend, consciously, what do we have? We have higher peaks and higher troughs, right? In a lower trend, we have lower peaks, lower troughs. So, if we're looking now, let's move back now into what we're looking at before, and that was with our looking for really good trades, okay? High probability trades. Now let's go back a couple of videos. What were we saying? We use if you trade a day chart, you then look at the weekly chart for the setups, right? So what do we have over here? We have the weekly chart over here. Okay, and we have the weekly chart over here, and we have the daily chart over here, okay? And what we have here is we're just simply going to draw a nice little uptrend here, because we're going to use the HT example here. HT simply stands for higher trough, and if it was a downtrend, if the market was going down, that'd be simply LT, or lower trough, or lower peak, okay? So right here we have a weekly chart going over here, and we have some nice trend lines going up through here, nice trend line going up through there, okay? So you simply have a nice trend line. And what we have is we have the market, we'll just scribble this one out here. And what we have here is we have the market coming down through here, okay? Now do you remember in the last video, I talked about what we need is we need the market to actually come down. This line through here represents that point right through there, okay? What we need is we need the market to come down and actually bounce off that point there, and then that's going to likely to see much more high probability moving up, okay? Now, that was the bounce technique in the last video. Now, we still need the bounce technique, okay? Now, once again, what we're doing right here is we're adding layers to add high probability trades, okay? That's all we added. The first video we talked about using the weeklies and the dailies. Now, the second video is we talked about if the market gets down to here on a weekly support line, on the daily, it actually starts bouncing off that support line, well, then it's likely to continue up, right? What other thing could we be actually waiting for to show that the buyers are likely to come in? Well, the HT, right? The HT or the higher trough or a lower peak, depending on which way it goes. In this example, we have an uptrend. So if we would want to see this market to really continue up, what would we really want to see? Well, let's just say this is our support line, okay? And this support line right here is a correlation or a connection from this point right here is exactly that point right there, okay? So just so you understand. Weekly chart over here, daily chart over here, the market started to come down, okay? The market started to come down through here, and what we're waiting for is a couple of things, right? So the market's stepping down here, giving us lower troughs, and then on the daily short-term time frame, we've had a nice little downtrend through here. But we know on the overall the overall longer-term time frame, what do we have? We have clearly stepping up, right? Now the market's come down. The overall market is going up on a bigger time frame. Small time frame has just had a nice little stepping down. What's the few things we should be looking for here? Well, one, we're at a big support. Yes, one. Second, what was our second video? Our second video was waiting for the bounce. So if we get a bounce, beautiful. That even adds more probability to showing that this point right here is showing it is a support level. But what happened to an uptrend? We have higher troughs and higher peaks, right? So would it be good to actually see a higher trough here? It would, right? It would be good to see a trough. Why? Because now we have here, and the market starts picking up, that point right there. Okay, this point right here, right there, is a higher trough. Now let's have a look at this. I just want you to bear with me from it because this might be a bit confusing. What we're doing here is we're saying the longer term time frame chart is king, right? Weekly chart is king. We see the weekly chart in an upward trend. The upward trend comes down now, has a nice big pullback down to a really good support line. Okay, now we move over to our daily chart so we can simply time our way in, okay? We don't want to wait for the weekly charts. We simply want to time our way on the daily charts. So the market simply steps down like it does now. It actually gets to that support line. We get the bounce. Suddenly it comes down, gives us a higher trough, showing the buyers are likely to come in control, and suddenly the market steps up from there, okay? What we have here is we have a trend continuation move. Why? Long-term uptrend with the weekly support line and a weekly trend. Come over to the daily chart, we come over to the daily support line through here, and what we have is the market bouncing off that support line, but on the daily chart it bounces off, comes back down and picks back up again, showing that this now has an even higher probability, massively high probability that it's likely to do this and continue up. That's the point. That's the point where you have a high probability or high probability entry level within this system. Okay, so let's just recap 3 videos we've gone through so far. The first video we talked about the weekly and the daily chart. The second video we talked about the market actually bouncing off first, waiting for the bounce first, and then that'll be a nice little entry level. Then this video, the third video, we talked about waiting for the high trough on the daily chart to show this overall picture is now starting to speak to us. Weekly uptrend, weekly support line, market coming down to a support line through here, and then the market picks up. Not only does it bounce, but it comes down, gives you a little higher trough. Okay, gives you a little higher trough here, gives you a little higher trough, showing the buyers are now much more eager. Because look what happened here. Lower trough, lower trough, lower trough, lower trough, lower trough. Come down to a weekly support line, but on the daily chart they pick back up. Comes now, gives us a high trough, picks back up, and now that's showing that this point here is now that point over there. And now guess what's going to happen? And now guess what's likely to happen? On the weekly chart, we're likely to see this again now. Make sense? Okay. So this overall combination, you're using the weeklies, you're using the dailies with the bounce. Wait for long-term support line to come in, and also waiting for that little higher trough really works out well. Okay, so even if you're trading, say, the E-minis or the futures, which is the E-minis, Or even if you're trading other markets, if you trade in the small time frame, such as 15-minute and 30-minute, that little higher trough sometimes is too long to wait for. Okay, if you trade in the weekly and the daily, so let's just say you're looking at the weekly for support, weekly for setups, and daily for entry levels, then this high trough works really, really well. Okay, even waiting for the bounce works really well within the weekly chart. But if you're trading, say, let's just say you're trading a 15-minute chart, okay, and you're looking for the 240 for the setup, okay, 15-minute chart, 240 setup, I would recommend not looking or not waiting for the high trough off this level, okay. So let's just say this is the 240 chart, the market comes down to a really good support level on the 240 chart over here, then we go over here to the 15-minute chart in this example, okay, 15-minute chart, the market comes down, starts to step down, and actually bounces off, actually gives you a nice little bounce off, and most cases, if the buyers are likely to come in there really strong, they won't actually give you a higher trough. What will happen is the buyers will come in and they'll just go sideways a bit and then straight back up again. Okay, and this thing will just take off and you'll miss the boat. Okay, so if you're trading like the S&P 500 E-mini, all right, or even a smaller time frame chart, try not to look for the little higher trough there. Now that's with the S&P 500 E-mini. Okay. If you trade, say, a 15-minute chart or a 30-minute chart on the stock market, I found that to be different. I found that waiting for the high trough is actually really high probability. Waiting for the high trough on, say, the E-minis, to me, you've got to be really, really patient and actually wait for those setups, okay? And meaning that with this particular pattern, it just doesn't happen a lot. Okay, it just doesn't happen a lot. So what I prefer in the E-minis is I wait for the longer term time frame to come in, wait for the short term time frame to show me that's just getting a bounce. Now I know we're likely to pick back up because long term time frame, short term time frame, wait for the bounce, nice little entry point, and go from there. Okay, I think you understand what I'm saying. Okay, so within this overall pattern here, it works really, really, really well. Okay, all right, guys. Well, that's it for me with this video. Remember these 3 videos. Once again, just to recap, 1, we have the weekly trends or the longer term time frames. Use those for the weekly supports. 2, at least wait for a bounce on the E-minis or the stock market. Wait for the bounce first to show that the buyers are eager. Or if it's a downtrend, wait for the sellers to come in, okay, first. And then to add an extra layer, wait for the higher trough first off the big support level. And this overall system starts to come in. And now we're added layers after layers after layers to add a really good strong entry level. Okay, this is giving you really good entry levels here. Okay, now in the next video I'm going to teach you my little technique called the target point. Okay, the target point. Let's see if I can target point. Okay, target point. Now what is target point? Simply, target point is a tool and a technique that I use to find, once I actually get into these entry levels, where is it likely to go? Okay, where is a really good high probability exit level? Okay, so now we've talked about entry levels within the weekly and daily or 240 or the 15-minute chart. Now what are we talking about? We're talking about target point. Where is a really good projection target to get out on or look to get out on, okay, once you get into these trades. Alright guys, that's it for me. Thanks a lot. Make sure you come to livetradingroom.com.au where I've got much more free videos just like this, and you can also get a lot more great techniques as well. So thanks again guys, and I'll speak to you soon.